Welcome, everyone, to another episode of the Endeavour Exchange, where we're talking all the trends affecting you and your money here with my colleague, Grant White. So, Grant, thanks for joining us. Getting into cookies here, and I know that's a big topic around the office.
Not the cookies we want.
No, not the cookies we want. So, talking a little bit about some of these big tech companies that we've actually been seeing, perform very, very well as of recently with some of these earning reports. But the two that we're talking about in this case are Apple and Google and how they're killing the advertising cookie. So maybe you could tell us a little more here about what we're getting into.
Yeah, I actually, this story is so interesting to me because it's, for people that don't know, like what the power of these cookies are that we're talking about. So anytime that you've been Googling something, searching something, been on a website, maybe even talking about something, and then all of a sudden you're surfing on some other websites and these ads are popping up for the thing that you were either just looking at, could have been looking at days ago, or even just talking about in some cases, right? That's the cookies at work, and it's the power of the modern digital marketing era. That's the type of stuff that's been going on, and frankly, it's ingenious. It's scary, but it's super smart. And so it's fascinating what's going on with it over the last, decade especially, what's happened with it and how advertising has changed. But what's really neat right now is exactly what you're talking about, is Apple and Google and what they're doing right now to kind of essentially squash the cookies. So that to cater more to privacy advocates to ensure that people's data is being protected more. So it's really interesting because Apple just put out a new update in their iOS where they're essentially making sure that third-party applications now have to ask permission to be tracking your activity in the apps. Whereas before, they weren't asking permission for that. It was just going on. And advertisers loved this because they were getting all this data about the individual users of the apps, and then they were able to market in the apps, they were able to market on websites and all that stuff directly to the individual consumers. So by asking permission now, the advertisers are really concerned about this because it's well, is everybody going to say no? And is this new form of advertising dead? So that's really interesting. So that's just come into effect with Apple. Google is taking a bit of a different approach to it, which is really, it's a different approach, kind of the same, but it's different in that they're squashing the old cookies and they're kind of creating new cookies. And I'm just gonna look at my notes here because I want to make sure I get this right. The federal learning of cohorts, or flocks, as I'm calling them, that's essentially the new thing that they're creating. So these flocks are kind of like new cookies in that, let's say you went to peoplemagazine.com, people.com. You're now going to get lumped into a category of people that I was gonna say trashy mags, but gossip mags.
So you're entertainment.
Yeah, no disrespect to anybody who loves people. It's you're gonna get lumped into a group of people that likes gossip mags, and for everything. So it's kind of the same approach in that
it's a little more broad,
but it's a little bit more broad. So you're not gonna get the individual marketing, but you're gonna get marketing towards a broader group of people. So all of these different approaches to it have unique ramifications, and so. In Apple's case, the advocates for privacy are applauding this, thinking this is great. They're really applauding it. The advertisers are losing their minds. Facebook, in particular, is losing their minds.
One particular, they had a great earnings, an excellent earnings quarter, but they did bring up the concerns when they were addressing shareholders and the investment world about their concerns and how moving forward this will ultimately have an effect on their revenue.
Yeah. I mean, there's definitely mixed reviews. Facebook is not happy about it. A lot of the advertisers are not happy with Google's approach either because they think that it's going to unfairly, give an unfair advantage to Google, who again is a huge digital marketer. I mean, that's a huge chunk of their revenue that's coming in, and because they get a lot of data through Gmail and through Google searches, they own it, YouTube, they think that they're going to have an unfair advantage going forward. It kind of remains to be seen. I think that regulators would have a huge issue if that was the case. So I'm not sure that that's going to come out. But and then the privacy advocates are kind of wishy-washy on Google's plan because they're well, you're kind of doing a good thing, but kind of not at the same time. So. I think it's going to be really interesting. It's, again, mixed reviews on this. Personally, I think that, marketers are really smart people. We've got a couple behind the camera right now that are also very smart. So, I'm going to cater to that audience. But people are really smart in the marketing world. They've known about this for some time. Like this isn't just like Apple didn't just throw this at people. They announced it some time ago. So I think that, you know, if this does end up having a bigger impact on marketers, they're going to figure out a way to work around it. But it also remains to be seen whether or not, like, you know, it is going to, like, are people going to opt out? Yeah, sure, some people are.
Are you opting out?
Yeah, good question. No, I actually kind of like the ads. Like, I think that by opting in, I get better ads that are more catered to me.
I agree.
No, I mean, I think you have to have a mindset that you don't want to get like caught in like the impulse purchases because of it. But you know, I actually don't mind like the advertisers like targeting me more specifically for things I like. So it's not a huge problem for me. But yeah, I certainly there's a percentage of the population is going to opt out, and so is that going to hurt marketers? Probably a little bit, but at the same time, I think they're really smart and they're going to figure it out.
There was actually a bit of research just to as we close off this topic. Bank of America came out with some research on this, and they're estimating that it's going to Apple's changes could shave off as much as 3% of Facebook's revenue. So, you know, it's sizable when you consider how much revenue they're doing, but at the same time, it's 3%, and I still believe. There's a lot of runway for Facebook, and we're seeing some of the areas that they're now exploring, payments, marketplaces, and things like that. So I think Facebook will do all right.
Yeah, like I said, I think they'll find a way.
Yeah.
So, you know, moving on, we've been rebalancing a lot of portfolios lately.
Yeah, we have.
You know, we've had some profits on the table that we want to take off the table and things like that. So why, you know, in that light, why should you rebalance your portfolio?
Well, first, maybe let's go over, if there's some listeners out there that don't really understand what necessarily rebalancing is. When we design a portfolio and we're working with clients, ultimately what we're doing through our interviews and kind of collection of data is determining what a client's tolerance for risk is, you know, what type of rate of return does their financial plan need for them to be able to achieve the goals that they've set out to achieve. And in that, we ultimately come up with where we think they fit on the kind of portfolio perspective. When you're looking at are they more aggressive, are they in the middle, more balanced, or are they more conservative? And so when we determine that, each of those, whether they're balanced or growth or conservative, each of those has their own asset allocation of, you know, how much Canadian equity do they own, how much fixed income do they own, more protective assets, how much alternatives. And so we set up that asset allocation from the beginning. What rebalancing ultimately is as time goes on, all the different pieces of the pie, we'll say pie because when you look at the portfolio, it's often shown in like a pie chart of the different pieces. Each of these pieces is moving around. You know, you have your U.S. equities doing one thing, you have your fixed income maybe doing another, your alternatives are doing another thing, and what rebalancing is just setting up a systematic time. It could be quarterly, semi-annually, or annually, where ultimately you bring those pie pieces back to the original intended allocations. And ultimately what it is doing is it's forcing you to sell the things that have gone up in value and have done well, and rebalance into some of the portfolio pieces that haven't done as well, and forcing you, because, you know, we talk a lot about that rule of, you know,
sell high.
Yeah, buy low, sell high.
Right.
It's a systematic way to make sure that you're constantly doing that, not getting in the trap of like, oh, it's done really, really well, I don't want to touch it, and next thing you know, it's not performing well. You didn't seize that opportunity, and so yeah, as you mentioned, we've been doing a lot of annual rebalancing lately, just looking at some of the concerns out there in the markets and how do we want to be positioned, and we've had pieces of the portfolio that have done really well that it's time to take some of those profits. So I'd argue it's an important exercise for investors who, especially if you're trying to manage that volatility and you want a smoother ride, rebalancing is an important piece of doing that. So it's going to smooth out your return. For retired investors, it becomes even more important, and we're going to actually pull up a chart here, and this is from Michael Kitces, who is a blogger, poster. He runs like a financial planning focused podcast business, and he has a chart here where he looks at a portfolio that had rebalancing versus a portfolio that didn't have rebalancing for an extended period of time, and there's actually withdrawals going on in the chart that we're showing you here. The investor is taking withdrawals, and as you'll see, the one with portfolio rebalancing it held up and maintained that capital even though withdrawals were occurring. And what was interesting is a big part of it, it was less about trimming the profits were good that were getting trimmed. Where they saw the biggest benefit was the taking those profits and putting it into the areas that were depressed in value, because that's where you're getting this bumped up as once valuations came back in those areas that were underperforming, you were getting a nice bump up and run up from being forced to buy into something that's down in value. So it was when I saw the chart originally, it was so like you'll see it. The one kind of stays level and the one just drops off, and just such an important chart to really visualize and see why rebalancing is so important. So it's a way to protect your capital, keep it, smooth out your returns, experience less volatility, and as Michael Kitz's data here that he put together shows, it's something that if you're not doing, you should definitely be considering.
Yeah, I think that it's so important to have rules around it too, like as you were suggesting earlier, because so many people get complacent with their investments, and unfortunately, a lot of advisors get complacent too. But a lot of investors get complacent around it, and hey, when things are going well, it's like they let it ride and ride and ride and ride. And sometimes, and believe me, I'm in favor of letting it ride. You got to let it ride a little bit because you want to capture that. But at the same time, if you let it ride too much, you open yourself up to way more volatility than what you're potentially comfortable with.
Yes.
So especially if you're not like 100% equity investor, we tend to see people who let their stocks ride way too much in the boom side, and then they get crushed on the other side of it, right? Because they're not taking their profits off the table. So whether you have rules around like times of year you do it, like twice a year, just every 6 months,
or
whatever.
A band of like how high can it get before you're trimming
outside 5%, outside your band, maybe you trim it back down, kind of thing. One way or the other, having rules is obviously an important thing, and we've got our own rules here around it, but
it removes the emotions out of it, right? Like if you set these rules in place when you're kind of level-headed, when you're experiencing a time, maybe it's something that you really don't want to sell because you're emotionally attached to it, or maybe it's just a fearful time like a pandemic when you saw markets initially come off in those first couple months. If you have those rules in place, it guides you, it tells you what to do. You can, as best you can, remove those emotions and just follow the rules.
Yeah.
So that's the whole point. I'm excited to kind of bring this topic up with you, Grant. I know, like many Canadians, we're streaming fans. We all have our own. You got your Disney Pluses, the Netflixes of the world. Some of us in the office, HBO, things like that. But streaming here in North America, fairly saturated. Like the market is, a lot of people have the account set up. There's not a ton of growth going on for some of these businesses here in North America, but the streaming wars are heating up overseas. So I wanted to hear kind of your take on it, and maybe you can enlighten us on who's in the fight.
Yeah. This is a really interesting topic because, streaming has become such a big part of our lives over the last, few years, but especially since the pandemic hit. It's just become that much more popular, obviously. And so, how, this was fun to actually review this because, how, when you get a movie or something like that and it's, voice dubbed over and subtitles, and, most people in North America, most people I know, that's they stop. I'm not watching it. I cannot watch it, And I think back to the Jackie Chan movies. I was just asking you about this before we went online here, but the Jackie Chan movies were the original ones were voice dubbed over, and the only reason we still watch it because Jackie Chan was amazing.
Yeah, superstar.
But for the most part, if somebody comes across a subtitled movie, they're just I'm out. I'm not watching this. But that's been the reality in a lot of places outside of North America forever. For decades.
That's the way it's been done.
Yeah, what
movies
Hollywood
big here and send it overseas, put your subtitles or dub over your language, and here you go.
People are watching Avengers and it's it's insane. They're just dubbing over somebody with a French language or blah blah blah. So that's the way Hollywood's done it forever, decades and decades and decades. And they just ship the movies or the TV shows overseas. They get dubbed or subtitled and whatever. So the experience of entertainment outside of English-speaking countries has probably been not that great.
Subpar.
Yeah. And it's been the equivalent of us watching a Korean movie that's been subtitled, and most people will not watch it, other than Parasite, which again amazing. Like, it was the first non-English movie to win, Film of the Year, right? Anyway, the point of this is the streaming services have made entertainment so much more accessible and so much more direct to user that they have also they've also been approaching it in a way that we can do content so much better. We can make content that is, let's say, more appropriate or more local, exactly. And so all the majors have figured this out and are doing it in a big way. So who's in the fight? Well, it's the ones you'd expect. Like Netflix is in the fight.
Yeah.
Disney Plus is in the fight.
Yeah.
Amazon Prime is in the fight. So the majors have all figured out that they are going to go direct to the consumer with local talent and local entertainment in their own language, and they are expecting big uptake. And they're putting big money behind this.
Yep.
I mean, Netflix is spending a ton of money on content already.
$17 billion they're planning this year.
Huge. Netflix will be making 38% of their content non-English going forward. That's like starting already now. 38% of their content is non-English. Disney Plus, 24% for Disney, and they will have 50 international projects in the works, including 10 European projects. This is crazy. Like, we're not just talking about in Chinese, like Mandarin or Cantonese. Like, we're talking about like European countries that they haven't been producing content for. Yeah. France, Italy, Germany.
Yeah.
They're getting like local, like German content, things like that. And so 10 projects out of Disney's 50 international projects will be localized in France, Italy, and Germany. Amazon has said that the number of local language content being produced has doubled since 2017. So the majors are in this. They are putting big dollars behind it. And yeah, it's an exciting time. I mean, I think from a cultural perspective, this has so much benefit into providing better content for people in all over the world.
Just two things I wanted to kind of add on that, just to give the viewers and listeners an idea of we're saying the fight is overseas now. 89% of the nearly 4 million new customers last quarter for Netflix were overseas. 89%. So that's where the growth.
Where's the growth? Right?
Where's the growth? That's what it's. The market's saturated here. We all have our multiple.
How many do you have?
Right now, I have 3, and the average is 4. The average is 4 in North America.
Well,
so,
I've got 3.
You're so average.
Has 1.
You're so average. Actually, sorry. 4. Hey Lou.
Yeah.
Or Hey You. Sorry, I'm like Hey Lou, combining. Hey You.
I never watched that.
Yeah,
one,
never. And then the other thing I wanted to add is what I think is so exciting about this development and these big companies going local is it opens up this whole new talent pool and their ability to share with the world their talents, the entertainers, the writers.
Well, again, I think we're seeing it when you get a Korean movie winning Best Picture, and this year I didn't watch the Oscars, but I saw some snippets of all the international talent that's being highlighted now.
Yeah,
that's amazing.
What a great thing to have happen. It's not just going on in North America anymore, and that you can really the talent will be able to it's going to be a lot louder. And I watch a lot of shows on Netflix, or I have. Where it was actually the cultured content for somewhere else, but the show turned out to be a solid show. So I put up with the subtitles because it's so good. So even if you look at the Narcos of the world, that was a very popular one, all subtitled. Yeah. I know that's not necessarily, it wasn't made with the intent of being cultural, like a location meant for Colombia or anything. It was meant for North America as well. But there's other shows that have come from Netflix that they did extremely well in the intended location, and now it's spread to other places. So
yeah, I think it's just great because the content's catching up to the technology. Everybody's got a film studio in their pocket basically now. Yeah. So really neat to see that, and I'm glad it's going that direction. I think it's going to be awesome. And who's going to be the winner in it from the streaming services? I wouldn't bet on any. I wouldn't bet on one. I think there's room for 3 or 4 that are going to do really, really well.
Yeah, you got to think Netflix and Disney going to have no issues exploring those markets, and then some others as well.
Yeah, totally. All right. Okay, this is kind of a fun one too. So, again, I think from a retail perspective, dollar store has obviously been a success story over the years, but I guess I want to ask you, what's in store for Dollar Store going forward now?
Short answer, I'm thinking more sales for the Dollar Store. what's going on? Well, we've been talking a little bit. We're seeing some inflation in some areas. Prices and certain things are going up. We have supply chain issues and whatnot. Delivery costs are going up as well. Unemployment, although we're making up ground, it's still nowhere near back to what it was pre-pandemic, and it may take some time to get there. So, what does this mean for the dollar store? The average consumers now may have less income in the future, especially if we're looking at stimulus being dialed back as we reopen and enter the dollar store. It's I shop at the dollar store, not for everything, but there's a lot of things that we get at the dollar store. And what's interesting is they offer identical products to what we might need from the big box stores, but obviously at a significantly reduced price. And so the stores are often located near big box stores, so it makes them a very easy switch. So if consumers are feeling, as we move through the pandemic, if their budgets are tight, if inflation is eating away at the dollars that we have, the dollar store is nearby the Walmart, it's nearby the malls, and it's an easy for certain things. Like I know we get a lot of kitchen utensils, like the Betty Crocker from the dollar store, where it's just we want something quick, cheap. Like we don't really need it, but we just want it, so grab it from there. So I think the dollar stores here are well positioned as we move through the pandemic to continue their growth. What's been interesting is McKinsey put out a report about showing consumers buying cheaper. And if you actually go back to around 2008 and you look at what happened during the 08-09 crisis there, dollar stores really saw an uptick through that recession. And so it wouldn't surprise me if as we get through the pandemic, because there are people out there who aren't in the same position as they were. They haven't got their jobs back. And so the dollar store is a place where you can help stretch that budget a little further.
Yeah, it's almost like we might see a bit of a barbell kind of a situation going on, because people that have money seem to have lots of money right now, and people that don't have money don't have money.
Yeah.
And there's very little kind of in between that almost right now. It's the gap's gotten just wider. So I think I can see a world where luxury is going to do well, like luxury goods and things like that are still going to do well. But you're right, on the other side of it, like the dollar store might just get that much more popular in the next few years out of necessity.
They sell essentially, small essentials, and it often doesn't make sense when you're buying these, cheap products. You don't want to pay double the price for shipping. Well, the dollar stores have locations all over the world and inventory sitting there ready for you to pick up. You're not buying the $2 things off Amazon because you're paying, if you don't have a Prime subscription, or you're paying double to just get it shipped to you. Yeah. So, there, as I mentioned, the 08 crisis showed the stigma that I think that surrounded the dollar store really fading away, and more people are going to the dollar store for certain things. So, the point is, if inflation does continue to grow, if unemployment remains above those pre-pandemic levels that we saw, dollar stores are likely to continue to benefit. And on top of this, consumers are finding it more acceptable. We actually have one chart here just to finish it off, and it just shows this is Dollar General location. So one of the four, there's only 4 major players in this space. So it's quite interesting in that way too. There's not a ton of competition, but this is just showing from 2008 all the way to 2020 the growth in locations in the United States, and it would be very similar here in Canada for a lot of the Dollar Trees of the world, Dollaramas. And it's just that it's up and up and up. And in the U.S. here, 2020, they're sitting under just under 18,000 locations. So, as we move through this pandemic, I think you'll see that chart continue to grow Canada and south of the border. So, we love the dollar store.
Totally. All right. Well, with that, I think we can close things off. So, thanks everybody. Thanks so much for joining us today, and. Please subscribe to the channel. We're on YouTube. You can find us certainly on LinkedIn. Go to our website, www.endeavourwealth.ca, and feel free to reach out to us anytime. We're happy to chat about any of your questions that you have, and we'd love to hear from you.
Until next time.
Until next time.